Okay, traders, welcome to this live intraday strategy webinar on SB Trade. Today is Thursday, August 2nd, BOE day. We just got the BOE interest rate decision from the Bank of England. Obviously, they raised interest rates by 25 basis points as expected. The commentary, though, not leaving much hope for another interest rate hike before Brexit, guys. It looks like markets are still pricing in the next interest rate hike from the BOE to be September of 2019. So looks like this might be the last hike we're getting, at least from the MPC in the near term. And certainly you're seeing the sterling trade pretty heavy this morning. So we do got a lot to cover. Good to be with you all this morning. Antonio, Mark, Mikhail's in the room, Peter, Pete, and Peter, Roxy, Tom, Ties. Yeah, great to see everyone here this morning. So on the menu for today, we're going to hit the sterling crosses. Sterling Oz, insane. It came right off range resistance last night. We'll take a quick look at pound yen. I know Jamie was looking at that. I'm not sure we got entry on that one, but certainly still looking lower there. The Euro Aussie consolidation continues. I just wanted to highlight that yesterday because someone brought it up in the webinar. Interestingly enough, it came up on IDO search as one of the top three, or the top of the top three performers over the near term here based on 10-day search. So we'll just cover that. Gold prices are still sitting at support. Okay, they're probing just below. So definitely something to look at. Ty says, what is IDO search? So IDO search is part of the premium service. If you have SB Premium, you get access to IDO search, which does ranking and pattern recognition. Just click on that tab, Ty. There's a whole rundown in a video of what that service entails if it's something that you're interested in. Hi, Michael. Can we look at the indices? Says Roxy. Absolutely. In fact, Peter beat you to the punch, Roxy. Peter wants to take a look at the SPX. He's short from a pretty decent entry, so we'll look at the SPX. I don't have anything on the Dow. I know yesterday you were asking about the NASDAQ, so we'll take a look at that. I don't know if you guys are watching equity bourses overseas. Anyone trading the DAX? I have it's a very interesting level that we're looking at with regards to price action there. So if we have time, we'll take a look at that as well. Do you offer a sample period to current subs? Ty, there's no sample. It's actually a third party. IDO Search is a research team that we've partnered with. So unfortunately, there's no trials on it per se, but you can go back and forth between your membership levels at any time. But I'll show you what it looks like today. Unfortunately, IDO Search is actually closed during this time period from 9:30 to 11, but I can show you what the search looks like. Yeah, right now it'll open until 9. It won't open until 9:30. So unfortunately, the time period is limited with when we do this webinar. But I'll show you what the search looks like, at least how it looked yesterday. Okay. Do you want to circle back? We'll take a look at the DXY. Obviously, tomorrow is non-farm payroll, so we'll hit Euro, we'll hit Aussie, which broke lower. Man, I was short Aussie yesterday. Right after the webinar, I jumped into a position and I reversed it. Last night, we dropped into support. I thought it was going to be a decent long from that level, and that broke through and took me out at a small loss. So it's moving lower. I'm not completely sold that Aussie's falling apart just yet, but we'll take a look at the levels. And obviously, dollar CAD trade setup that we covered earlier this week. Okay, so any other questions or trade setups you didn't hear? Feel free to throw them on the message board at any time. A quick note, guys, I'm trying a new setup here in the Daily FX office, so do let me know if there's any issues with the sound. Again, sorry to keep running tests on you guys, but trying to get this squared away. So hopefully today we won't have any issues. Obviously, yesterday from SB office was perfect as always. Okay, here's sterling. So BOE comes out 25 basis point hike as expected. Again, Carney sounding a little bit dovish. Here's what the weekly chart looks like. You know, most notably is those swing lows that we made in October, November of last year. That's basically 30.27. We're sitting on that level right now. I can't advocate guys chasing this any lower from here. You're at yearly lows. You're at former swing lows. Is the pressure still on the downside? Yes. From a trading standpoint, does that leave us anything if we're not in a position? Unfortunately, no. I'd love to just be on here and jump and just tell you guys there's a great opportunity. But look, if we've missed the train already, there's no real respectable place to put a stop. I'm still interested in seeing how the week closes. Now, remember one thing, very objective. We're only in the second day of the month. Opening ranges are just taking shape. A lot of these trades are at or near the extremes. And this is why we take a little bit more of a side seat when we start off the month. It's well warranted. It's so moves like this don't slaughter us. Now, again, if you're super nimble, I'm all with you. Go for it as long as you're practicing good risk management. But we'll take a look at the levels. I just want to highlight the weekly chart. It's really, really critical here for sterling on where we are. Where we close the week is absolutely paramount. A close sub 30.27, those swing lows, you have to continue to look for a drop closer to the lower parallel, closer to 128.77, which is the key 618 retracement of this entire stretch from the 2016 decline. Those are your next levels to the downside as far as targets if we close below 30.27 today. Okay. Daily chart looks like this, or looked like this yesterday. Again, we were noting that we were right up against resistance ahead of the BOE at 31.64. Just higher, you had the monthly open. Okay, that's right here. The July open, 31.64, 31.80, major resistance, and the objective weekly opening range highs. We tried to make a run last night, failed. Once we broke this level, subsequent targets 30.40 into 30.54. And then 30.11, okay? And that's what we're trading just above right now. It's the 786 retracement of the advance, but also you have that downslope for the near-term picture that we've been watching. So here's what sterling looks like now on the daily. Again, I want to just highlight that the divergent signals that we've gotten into the low, right? Four periods of divergent lows suggests that, again, downside's waning. You still have that support trigger in play. Here's price at former swing lows. What do you do? What do you do? Do you take a long here and just try to fight this trade? It's a gutsy call. I wouldn't necessarily go for that play just yet. You might see some reversal signals into the U.S. Open if the markets turn on this, but this is the level to watch. I don't want to short into 30.27, okay? So the low close, just for argument's sake, guys, also the low close for the year comes in at 30.16. The low that we made so far this session, 30.16. So again, I'm not saying it's going to hold. I'm just saying this is where you want to be cautious. Okay, you don't want to jump into any short positions here at support. At the same time, maybe we get some sort of bump. Let's see what it looks like on the intraday chart. Here's what it looks like. And here's what we looked like last night. So we've basically broken all these levels. We're into that last confluence region of support. You can see that slope held just lowers 30.11, the 786 retracement. So far, the low that we've made, as I said, is 30.16, 30.15. So we're still deep in oversold territory. You look at this thing at like a 60-minute chart, still in oversold territory. 30-minute chart, still in oversold territory. So you don't want to fight it just yet. You're sitting at a level that you want to be watching for a possible interruption or a rebound. If we break any lower from here, there's really nothing to look at until those lower parallels. Okay, maybe 28.77 is going to be that long-term major key Fibonacci retracement, converges on slope early next week. So it's very clear here that any lower and sterling could really start to fall apart. Okay, not going to fight this just yet. This is an area to look for if you're going to get a bounce or some sort of corrective rebound. You'd need to get back above 30.90, the objective weekly opening range lows, to start thinking that this thing might have some legs. Okay, but this is super precarious. You do not want to get too heavy-footed on this just yet. Add to that, we do have the NFP, non-farm payroll, here in the United States tomorrow morning. We're expecting a pretty decent print. The FOMC yesterday didn't give us anything. Keep in mind a couple things for the FOMC, guys. Starting January is when we're going to start to get the monthly FOMC pressers. So right now they do them quarterly when they release the projections and the updated economic assessments. Powell has already stated that starting 2019, they're going to be doing monthly pressers. And what that means is that essentially gives them a lot more flexibility with the timing of subsequent interest rate hikes. So as it stands right now, we're still only getting one in September and one in December as far as the pressers and the projections are concerned. Both of those are priced in largely for an interest rate hike already. So as far as the NFPs are concerned, I mean, unless you see a large miss, we're pretty much priced in. Does that have any legs to offer the dollar? We'll have to see what that looks like. But any questions here? We'll jump into the dollar crosses a little bit later in the session. Any questions here on sterling? So watch that 30 handle, 30.11 most notably. If we close above this, there's hope for some sort of bounce. If not, it could just completely fall apart. There's really nothing left until we get down near 28.77. Okay. The other one from last night's update, and I just wanted to highlight it because there was no change, so I just added the link here, is the pound Aussie trade that we've been following for the last couple of days. Pound Aussie on the daily chart is just insane. Look at this. If this doesn't excite you, check your pulse. Look at this basic trend line off of the yearly highs. Boom. Monthly open resistance from July. Boom. It's exactly where the range highs were. It's exactly where this thing turned from. Here we are. Remember, the consolidation is still in play. Break below 76.16, Charatamo. There's a long way down. Okay, the slope doesn't even come in. This is not a parallel, by the way, guys. This is just a 4-point touch. Okay, basic trend line. That doesn't even come into play till like 74.50s to the downside if this breaks. If it breaches, my favorite move was the breach, but you have to take what you see. If we do get the close above, then you're looking for the stretch near 79.50, and that would be the objective range highs for a few months. So the levels are still pretty clear. The consolidation is still in play. Like I said to you guys yesterday, if you're someone who's near-term trading and you want to play the inside of this range, man, there's been nothing cleaner. Range support holds, range resistance holds, range support holds, range resistance holds. This has got to give way at some point over the next couple of days. There's not much time left before this thing just squeezes into oblivion. So we didn't get the break today, but the levels remain pretty well defined. Okay, so there's no change to any of those levels that we highlighted earlier in the week on pound Aussie. Okay, we're still right in this apex. Watch this one. It's going to be good. Same thing with the euro. Ty says euro also in 4-point touch right now, still in a triangle, lower boundary. You talking about euro dollar, Ty? Yes, I agree. Euro dollar is not done yet either. Yeah, that's still, well, it's touching the bottom boundaries right now. So if it breaks here today, it's going to be a make or break. We'll touch euro in a moment. I like where your head's at. It's exactly the same thing. So any questions here on pound dollars? Unless you're a near-term trader, someone really, really near-term, and you're trading the inside of this range, there's nothing to do here just yet. Ultimately, we're looking for a breakout, either above last month's open, 78, or below 76.16 to really validate, a stronger conviction near-term directional bias on this. Ty says, please explain the degree level 2, 3, or 4-point touches, please. As far as trend lines, so Ty, it's very simple. The more points of touch of contact that you have, the stronger the trend line becomes. So on this one, you have 1 point here for the low that we made in June 22nd. You have another touch on June 29th. You have another touch on July 9th, and you have a final touch here on July 19th. So the more touches that you have, the more conviction you have on the slope. So inherently, this slope needs to be a target. If we do break the downside, that's got to be something you're looking at. You've already reacted to it on 4 separate occasions. When it's just a 2-point touch, 1, 2, you never really know, right? Because any 2 points can make a trend line. So 2 points are speculative, 3 points confirm a trend line, right? And then the 4th and 5th and subsequent rebounds just strengthen that level. When you are at 4 points, are you looking for a break? If it's pregnant, is that what you're saying? So when it's a 4-point touch or a 5-point touch or something that you've seen so many reactions off of, Ty, it's a limit order as far as any short entries that you're looking at. I'm not someone who's going to automatically put a long entry at that level. I want to see what's going to happen there. If I'm in a short, that level is my limit on the inside. Okay, so if we break here and we finagle our way into a short position, that's where the target is. Doesn't necessarily mean I'm going to take a long position. I might, if price gets into here and gives me a reaction like this, or a reaction like this and we get a close well above a spike low, then it might be an entry to play the long. But you have to think about trading as an if-then statement. Right now, I know that if we break, that's where I want to target. What we do there on a fresh position has to be determined by what price is doing. Does that make sense, Ty? Remember, this is a daily chart, right? So if when price breaks, if and when price does break and we drop there, then we're looking at the 120, we're looking at the 60-minute, we're looking for divergence, something to tell us that we should take the long there. But right now, that's the target if we do break lower. Ty says yes, right on. Great questions, Ty. Great questions. I do think this one's going to be fruitful. I think we'll get a play off it. If you're not playing the inside of the range, I do think we get the breakout at some point. And, this pair is known. When we make the break, it's going to give us a couple of days of run. So patience pays. It's only the second day of the month. Keep an eye on pound Aussie. Okay, let's pick up the pace here a little bit. That was 1 and 2. I'm not talking to you, Siri. Pound yen. I just want to touch on this really quick because I know Jamie's been talking to you guys about this. And here's what the intraday chart looks like. I'm not really trading this personally, but the daily is pretty clean. I know this might look, let me take that back. This might look messy, but let me show you what I'm looking at. The upslope that we've been working with all throughout last year, that broke. Okay, it's been roughly resistance ever since the lower parallel broke. But this parallel that we've been watching off the highs for the descent has been pretty clean. Lower parallel just missed support. We probed into support again at the lower parallel, median line resistance, break acceleration, median line resistance, right? So inherently, the push off the median line risks a drop towards the lower parallel. But ahead of that, and the reason Jamie had on today's, if you look at the squawk for today, the last order that we had here, the reason he was targeting 44.55, I loved that level. Even lower for me, you had the low day close for at 144.10 for the year. You have a 38.2 retracement of the entire advance from 2016. That's 144.46. And then you have basic slope support off the lows. So really sweet area target just on the insides, exactly how I'd play it on pound yen. I do think there's a little bit more downside to go. Now, the one thing that sort of I was scoping out this morning, I don't know if it has any merits or if it should necessarily hold you out, but something like that, you know what I mean, is a little concerning. You know what I mean, that you might see some sort of hold here near term, but something to consider. Something to consider. Here's the near-term picture. Basic 786 retracement from the advance off the lows that we made just in June has 144.95. This is another reason why, an area of which you could see, former swing lows, former swing highs. Some inflection here. Yeah, Peter Sound says, he says, I saw that. Okay. Oh, God help us. Any questions on pound yen? Not something, again, I'll scope this out. I'll see if we get a reaction on drop near 44.45. Might be a nice area to find a little bit of a bounce, but they call it the dragon for a reason. So let's just see if there's any actually slope to this. Give me a second. Not the cleanest. Not the cleanest, but we'll revisit this. Anyway, in any event, 144.95 might be a soft target. 144.45, 144.50, that's the real Bahama Mama there. That's number 3. Number 4, real quick, again, another one that we're just tracking at this point. There's really, as I said in yesterday's piece, guys, there's not a lot I'm looking at, and that's okay. You know what I mean? Early in the month, it's kind of worth the wait to let price action pan out, especially when you have so much going on with as far as event risk is concerned, and central bank rate decisions and non-farm payrolls and whatnot so early in the month. Um, it's worth it to be a little patient with these trades. The other thing I just wanted to highlight yesterday was the Euro Oz setup. Now, we talked about this in the webinar yesterday, and interestingly enough, like I said, the IDO search came up with this as the #1 match, strongest match um, for a gain over the next couple of days, and certainly we've already seen a pretty nice rally from yesterday. So here's Ty, just a quick look at what the IDO search results look like. This is a 1-day projection based on a 10-day look back, and we're looking for patterns that match what price action has done. It gives you statistical significance for the percent of up, percent average gain, percent average loss over the last look. And the average return is about 0.3%. So it kind of gives you a nice gauge of what we should be expecting price action. You could do a 1-day search, a 1-month search, a 1-week search. It's pretty cool. So I glance at this from time to time just because it gives us, again, if you're a subscriber and you click on it, it'll actually give you the top 3 matches and the worst 3 matches for the worst performers on a daily basis, weekly basis, what have you. And Euro Aussie came up, and it was interesting that this came up because price was at support, right? Price was at support. Price was trading at the range lows yesterday, and that's what we kind of wanted to highlight. We were at 57.48 or change, just coming off that 57.28 level, which was the objective monthly opening range lows. And although we've probed below intraday on a closed basis, it's been pretty rock solid. Okay, look at that thing. Coil, 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 coil. The longer the coil holds, the bigger the break, or the more significant the break. So while this is frustrating for us as traders trying to kind of get into a position, we like trending markets, right? Things that we can kind of hold on to for a while. That's just not the environment we're in. Nimble is the name of the game until we clear either sub 57.28 on a closed basis or above 58.46 to clear the way for the larger advance. Okay, so another one to keep your eye on. Maybe not something operable right now, but something to keep your eye on. And again, yesterday with where we were trading, the IDO search gave us that sort of added tell that we should be looking for an upward slope over the next 48 hours. And here we go. We've moved higher. Initial resistance is the 100-day moving average. Ultimately, again, key resistance still 58.46. That is Euro Aussie. Last but not least, and then we'll jump straight into the dollar crosses to get ready for tomorrow's non-farm payroll report, is gold. Gold is at support, plain and simple. If we see a close below 12.14 today, again, your focus is still on a move towards 12.04, the March low day close, and also the swing lows that we made right back here in July of last year. So the levels are pretty clear. You have divergence into lows. We've recognized that. The trigger and support is there. So if we were to close below this today and you get a downside break of the trigger, your move is 12.04, if not lower. Okay, this is a pretty big support barrier in gold. We're looking at gold even on the weekly charts. Okay, you're just sitting at a basic 618 retracement from the 2016 late low. Okay, so watch gold prices today. Watch gold prices specifically into NFPs in the end of the week. No change to any of those gold levels. Questions, comments, concerns on gold before we move on? Okay. All right, let's get ready for non-farm payrolls. Number 6, here's DXY real quick on what we're doing. Look, we broke resistance for the near-term slope that we've been watching, but daily slope or daily chart still has resistance just a bit higher. So the highs that we made in December, what was that, November? Excuse me, November of last year, 95.15. the June high day close comes in at 95.32. The reason I still leave that marked, we obviously have a new high day close, which is right around 95.15 anyway. The reason I leave that is because that's actually the close highs for the year. So it's still a notable level in my mind. So long story short, 95.15 into 95.32 is still the zone. Guys, the last 6 times we've approached this region, we've failed. So there's no reason for me to start, targeting a breach of this region. There's nothing necessarily fundamentally that's shifted. Non-farm payrolls are tomorrow. If you get a spike into this region, hell, it might be another opportunity, one more opportunity to get short again. I don't know. I'm flat as it stands right now. Kind of want to see how NFPs come out, but that's sort of the game plan I'm looking at. If we do spike higher, especially if there's nothing really warranted to offer any information that we might see that speed or hasten the Fed's pace. We're largely priced in for September and December. So what is there to rally on exactly? I'm not sure. We'll have to see if there's any push higher here. Okay, so still mindful of dollar. 95.15, 95.32. Still have probably a little bit more upside to go, but I'm not doing anything until we see a reaction in this region. Either a clear close above, and we're looking for 96, or if we fail and close again a daily close below this threshold like we have the last 3 times, that might be the opportunity to start fading yet again. Here's what it looks like on the intraday chart. Downslope that we've been following, like I said, looked great here. Even here last night, I was kind of seeing what we would get. Here's the breach. Interestingly enough, the high at 95.05 turns out being the 618 of the decline. So does that mean maybe our slope is off and this is still something that we want to be watching into tomorrow? This is the dilemma I have with the dollar right now. So I'm willing to sort of scratch this slope for now. Keep an eye on that 95 level. Remember, 95.32 is going to be that's the line in the sand. But I'm still looking for dollar exhaustion. He says he doesn't want to go down. Ty, yeah, it's like the name of the game. And you remember when it was ripping last week and we were just about to give up on this thing? And I was even telling you guys, look, we can't keep fighting it. It just keeps rallying. That's when it collapsed. It's like you capitulate yourself. Even the best of traders do this. So the fact that I'm kind of like throwing my hands in the air makes me think maybe actually it's time for a turn pretty close by. Now we have to be objective, right, Ty? So the one thing I do want to know is it's Wednesday. It's Wednesday? It's Thursday. It's Thursday. We made a break of the objective weekly opening range. Highs should be looking for a Thursday, Friday high. NFP's on tap tomorrow. We already broke the highs. Could we get one last stab higher? Sure. Do I still want to be chasing that into fresh yearly highs? No. You know what I mean? So a Thursday or Friday high could spike higher into NFPs, might be an opportunity to get short even against the high, but 95.32 is still going to be my line in the sand. Make sense? The unrelentless dollar. Okay. Euro. Number 7. Oh, one more thing on the DXY. Let's not forget the one singular weekly chart that we've been watching on the DXY has been governed by what, guys? Someone tell me that they've been paying attention to this. We've been talking about it for months. The 52-week moving average has been insane. Okay. I think it was 7 last time I counted. 1, 2, 3, 4, 5, 6, 7. Yeah, 7 attempts to break. This is a weekly chart. The 52-week moving average failed miserably. And if you look at this on a closed basis, we couldn't even make a close near it. Okay, near it. So, it's the same trade, guys. It's the same trade 2.5 months later. Momentum's flattened out in the weekly chart. Price is still below that 52-week moving average. If we probe into it again on non-farm payrolls, is it going to be the same as the last 7 attempts? We have to see a weekly close above this to get it going. Guess what? That moving average is at 95.30. the level that we've been talking about as our line in the sand is 95.32, which is the high day close and the high close for the year. So I just really like the significance and the technical levels that we're looking at, which is why I'm a little bit more comfortable kind of really just waiting this out until the end of the week and see if we can't get that push higher to even give us a better opportunity to fade. Now for Euro, again, Euro on the weekly charts on a breakdown approach. Here's what Euro looked like on the 30th, into the close of the month. As far as the intraday chart, I'll go over that in a moment. But I just wanted to highlight Euro on the weekly. What's the level that we've been watching? We've been watching the 200-day moving average on the DXY. On the euro dollar, it's been all about 1605. 1602 is the yearly low day close. We're right there, guys. We're still trading above it. Okay. I'm not going to front run the break. A weekly close sub 1605 would do it for me. Such a scenario, you're looking for 1448 is a lot of room to the downside, 150 pip move if we get the break. But again, you know, especially this one on a closed basis, been pretty nice rebounds off this level. Here we are again, testing the median line, those former swing lows. Watch the weekly close. Okay, watch the weekly close. The daily chart, I think this is what you were talking about, Ty, right? We're testing the lower bounds of that consolidation range. You can take this line, connect it to that. We're basically right there right now. Again, 1602, the low day close for the year, right there on slope. We're testing the lower bounds of the slope. Now, the one thing in this chart that's a little more precarious is what? If we close at these levels right now, looks like we're getting a momentum trigger break. And this is a 1, 2, 3 touch. Count that as a 4 touch. If we do close the day and the momentum or the oscillator is below that line, that's not a good, that's not necessarily a good development for the momentum profile on Euro. Okay. I don't like trading, let me take a step back. Trading the short side of the euro, there's still, a huge congestion region that we have to be mindful of. Yes, 1602, 1603 on a weekly basis is going to be our line in the sand, and a weekly close below that would put us bearish. But don't forget, just lower, you have the low closes of the year, swing lows from here. You got the November low of last year, the 2016 high. It's all 1550 into 1530. Okay, so you got a 20 pip range here of real high congestion that we've been in since the decline of last year's November low. So if we do break there, just watch this region. Don't get suckered in. For me, that's the kind of the invalidation level to really give way to those downside targets. But objectively, 3-point touch, consolidation. If we do get a break, the room is definitely to the downside. And guys, just to give you guys a quick picture, okay, whoops, of like some objective analysis here. If this were to break, oops, the measured move, okay, forget all the interior fib levels, by the way. Let me redraw that. Clean this up, okay? The measured objective move of a consolidation break like that, your technical analysis 101, that would actually give you a target down here. The 618 retracement of the entire advance from the yearly lows of last year. That 618 comes in at 111.86. The measured move comes in at 111.60. So just to highlight the implications of what this could mean, okay? Not my favorite move. Again, I am of the mindset that you get more fake out here. This thing drops into 1550 even, fakes out everyone, then starts to rally. Again, maybe I'm being stubborn, but this is the level that would open up the measured objective targets at 1160 and 1180. Okay, so until that happens, you're just testing the bottom end of the range. That's it. Here's what Euro looks like on the near-term charts. Okay, there's the consolidation range that we've been following. Okay, here's Euro again from earlier in the week. There's that pink, or the bottom side was red here, but the consolidation level that you're looking at, right? We rallied. Remember, 1750 was our bearish invalidation. That was the level we needed to see breach to mark resumption, right? What happened? Well, we rallied right into it and it failed. So you're looking for the bottom end of the range. Guess what? We're there, right? We're there. 1206 is the low day close, 618 retracement. We just went over this. Nice little region of support, 1603 into 1615. It's exactly where we bottomed. If this holds, it'd be a nice launching point for a possible move higher. Now the only trade in my humble opinion, again, on a move like this was a entry at or close to 116.03 with a stop against this low to try to play the rebound. I didn't take that position because again, there's nothing here in momentum that's kind of turning me on. It was in oversold territory ahead of this webinar, so that's not a time I'm definitely gonna try to fight the trade per se. But all I can say for euro is down but not out, not yet, not yet. Okay, very similar to what we were talking about on some of the other crosses, guys. An objective break of the weekly opening range has us looking for a Thursday, Friday low. So the propensity for this thing to keep sinking lower into the close of the week, unfortunately, that risk is still paramount. Okay, and we're still in oversold territory on the 2 hour. We're coming back from the 1 hour, but let's see if the U.S. Open gets us another drop here, maybe another test, some more divergence, something to get us on a fighting path here. But this is make or break, at least near term for the euro. Any questions? So no change to any of those levels. Okay, these are all the same exact levels we've been watching since the start of the week. We came into resistance that held. We're now coming into support right here. That's holding. The only difference here, guys, is this slope line. We attached that to the new low. So we took that to this low. That's the only difference. And that made it converge right here on this region. So 1603, man, we've been talking about it for weeks. For weeks. Swing lows from the weekly chart, whether it's these swing lows that you're looking at from back here and the close low that you made back in October, whether it's the low day close for this year, whether it's the 618, it's all right here. So, it's make or break for euro. Questions, comments, concerns, euro? Okay, that was number 7. Okay, number 8 is Aussie. Got stung on this one, but net we were good on the day, so I can't complain. So I took a short yesterday, shortly after this webinar. It was pretty tight. I think we closed out like 17 pips profit. And then on this rally, I thought it was a nice opportunity to fake a false break, if you will, to try to fade this for a move back up into 74.20. You see I have it marked. Just a 618 retracement of that move is all I was targeting. As we got into 74.11, again, last month's open, I barely scratched out a quarter of the trade. And then I got stopped out on the rest when we dropped. So, here it is, a drop and break of the objective weekly opening range. Again, leaving the risk lower in Aussie. This one's a no-go for me on even trying to fade anything near term. We've broken well below the 618 retracement. Range lows as far as the consolidation just in euro, right? Range highs, range lows. Doesn't come in until what? The same insane major long-term fib level we've been talking about for months. 73.27, 618 retracement of the 2016 advance. It's still the level to beat. We're still in the same godforsaken range. Yeah. So listen, it could run back in 73.27. If we get there, I'll re-examine it. Till then, if you're holding a short and you had the gutsy call to take the break of the support yesterday, I'd be fading out. I would not be bailing on the position. I'd be chipping away at it. Take a little off as we get closer. Here are the intraday levels. Take a little off, if we get closer to the 786 retracement. So if we get near 73.49, shave off a quarter, half position, break stops to even. But the low day closes 73.36. That would be where I'd look to take the rest of the trade. Key support, 73.27. No ifs, ands, or buts about it. Okay, so at this point, do you ask yourself, Mike, do we remove that pitchfork? Yeah, at this point, look, The levels to keep in mind, this 618, by the way, I just wanted to keep that as a reference to show you how I was trading this yesterday. That's now null and void. Weekly open, I'll keep. Weekly opening range lows, I'll keep. Okay, yeah, we can drop this. Near-term support targets, more of a hard support. I'd take off everything at the low day close if you're holding shorts. But in this region, 73.27, 73.36, I'd be looking for something like this. I'd be looking for something like this. I'd be looking for something to keep Aussie alive. Because again, the weekly chart is ominous. We close below this, guys. This is last year's swing low from May. Again, the key fit nature, the Fibonacci ratio there, downside break, lower parallels coming at 72. You know what I mean? 71.45 is going to be these lows. So if this gives out, man, whew, things could get messy. So the range holds until it doesn't. Range low extreme still 73.27. I'm fishing for a low somewhere in this target on the way down for Aussie. Questions, comments, concerns? Again, you think to yourself on a situation where we're looking at all these trades which have broken their weekly opening ranges, which are sort of lines in the sand. The FP's on tap. Might be the last opportunity, the last hurrah to see one last dollar push. Wash out the weak hands, jackknife lower, do something like this to fake out, to fake out the markets. Guys, give me 1 sec. I just want to check something out. Does anyone know off the top of their head when the last NFP print was? Okay, so last NFP print was on July 6th. That was right here. And what happened? You got the dollar rip into the close of the week, even followed into the Monday of the following week, and then it started to collapse. So this is actually, I'm sorry, this is the Aussie drop off, right? So this is dollar weakness, a sell off on a pretty strong NFP print. And this was kind of perplexing for everyone. Why is the NFP print, it's strong, blah, blah, blah. It all has implications to do with if it's going to move the Fed. So if you get sort of a similar scenario where the dollar washes out, get a drop lower than the dollar sell off, it might be a similar play. Now we're in a different position in trend, but since we're so close to these pivotal levels, I leave it definitely a possibility to see a dollar rip before it turns around. Again, DXY, push into the high day close, then reverse or something like that. Okay, that's Aussie. Dollar CAD, number 9, is the last of the dollar crosses, at least that I've been following. I don't like dollar yen, guys. Dollar yen is typically a big mover on US data, so something, I would default to Jamie's charts on that. I just don't like where dollar yen's trading right now. I'll show you the daily chart in a moment, but I want to go over some of the indices you guys asked about, so I want to leave some time here. Here's dollar CAD, no change to any of the levels. We've actually been pretty spot on with this one. It's been a chop fest, I'll grant you that. We started off the week with this chart citing resistance at 30.67, bearish invalidation at 31. We got as high as 30.95 before failure. We didn't quite hit the downside target. The closest that we got was right here. I think the low was like 29.75. We were looking for 29.68, 29.56, this region here. Beautiful confluence region of 100% extension from the decline off the highs. Okay, boom, 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 100% extension, 50% retracement of the advance, and slope support. We were talking about this yesterday in the webinar. I was saying I still think you can get the drop there. We've got pretty darn close. Here's the recovery. No change. Okay, no change. Near-term resistance now 30.50. Bearish invalidation. I dropped to 30.67. That would take you back above the weekly open. It take you back above that longer-term slope support that you're looking at in purple. So if we get back above this, the threat of 31.30 is just there. I don't want to be fighting this, but near term, nothing changes. Near-term resistance 30.50, bearish invalidation 30.67. Looking for possible exhaustion on a stretch higher here. Key support still 29.56, 29.68. Okay, so no changes to any of those dollar CAD levels as of yet. Okay, any questions on any? Let me just, I'll just show you the dollar yen chart I have, just for reference. Remember, anyone who's new to the room, you have that camera button, so feel free to click on it if you want to take a picture of this chart. But here's dollar yen, what I have on the daily. The intraday is kind of messy for me. Here's why I don't like it. Let me show you the dollar yen on the weekly. Okay, like what the hell do you do here? Put a pistol to my head. Again, I default to the wanting to be short. This thing came and made an exact 618 retracement into that high. Momentum probed into 60, but it held. So look at all these peaks here. Held the high, held the high. We're kind of making that same move here. I can't get comfortable unless we get below 1088. More specifically, that 200, the 100-day, the 52-week, moving average down here, 110, sort of would be the break that would validate, okay, we have a bigger high in place. Till that happens, it's a tough one. It's a tough one, and this is why I really don't know what to do with dollar yen. And you haven't seen me update it on the intraday charts in a couple of days. It's just, we had a decent run with it for a couple of weeks where this thing was super clear. Now, I don't know. I want to see a weekly close below 110.88, better 110. If we close back up north of 1162 on the week, I think you look again for a stretch back towards 113 once more. This was a perfect area to find resistance. Long 200 week moving average, 618 retracement. Couldn't ask for a better reaction. Now the drop here. Check. Okay, we're back. The drop here is what we need to sort of get resumption. So that is dollar yen. Any questions on dollar yen? All right. And a reason, by the way, another reason, this is the daily chart, another reason for dollar yen 1088. Look at that. Look at how critical that pivot has been. Sailed through, acceleration, resistance. We actually gapped on top of it, then broke lower, resistance, resistance. When we broke, acceleration, support, 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 and now converges on that 38.2 line of the range. Okay, so that's your key support there for dollar yen. The indices, let's go. Who wanted to go? Peter, you asked first on SPX. Here's what SPX looks like for me, brother. The daily chart actually is pretty clear. So your short is from 28.24. Love the entry, by the way. 28.27 was the level that we were looking at. It turned right ahead of that. You nailed it, brother. 28.24 is actually also the monthly open. So you are at a ideal entry as far as the short side is concerned. Now, by the way, also former trigger support. I think we went over this. Former slope support trigger in momentum, one touch, two touch, break, match to break, and a descent in price. The rally, resistance, 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 same slope. So it looks pretty good. Now, the reason I caution you that near term you might see a little bit of a bounce is because of these former swing highs. So let's add this. Okay, former swing highs. You saw a pivot there, the break. Once we broke above it back here on July 12th, it's been support ever since. Support. We back? Check, check. Okay. Support. Okay. So that's 27.90. The low that we made today was 27.89. Fractional 5. 0.5, right? So actually 27.90 if we round it. But you get the picture. So I wouldn't be surprised if this holds. You get a little bit of a rebound recovery, sure. As long as you hold today's highs, basically again that 50 line, I think you're all right. It depends how much pain you're willing to take on the trade, Pete. For me, Michael Boutros, if I was in that position, I could tell you that I'd be looking to shave off a little bit, take a quarter off the trade, maybe even a half on a short on risk. It's been, obviously you're in a pretty strong uptrend. So I'm very cautious on the way down early in the month. So for me, I'd take off a half or a quarter of the trade there. Stops to break even if you want to play it safe. Stops above 28.28 would be if you want to be a little bit more liberal with the trade and really think if you're going to get a deeper drawdown. That's really, for me, bearish invalidation. That would take you back through the monthly open. You know what? I'm lying. That 618 has no merits. We broke the new low. So 68.25. So basically a break even trade for you. Your entry is 68.24, so you're just below that, right? The new 618 based on this new low, which again only has merits as long as this low holds. I like it lower below that. The next level, which what I was tweeting with you before, Pete, is down here. Basic 236. If we were to make a basic 236 retracement, nothing fancy, just a basic 236 retracement, takes you as deep as 27.77. Now, just above that, why I told you 27.80s is because you have the median line. This is a modified shift formation, okay, off the low for the year that we made back in, what is that, April and May low. Boom, boom, boom. Upper parallels caught resistance. 50 line has been, it's decent. If you look at it on a closed basis here, you have seen some pivots, break acceleration, resistance, break acceleration, support. So I'll leave it on there. It's not going to hurt. But the median line is converging just ahead of it. So that's sort of your next downside target. Now, a closer term approach on this, if this is just, Pete, if we want to argue this is just a correction, kind of a 2 equal leg down approach. Look where the 100 comes in. Let me put it at the bottom so you can see it. You know what I mean? 27.76. We were just looking at 27.77. So for me, that's the downside target I would have on the rest of the trade. Be mindful that 27.90 is just, it's just a former swing high, a former swing low. Could catch a little bit of a bid off this. Momentum is at support. Wouldn't be surprised to see some recovery. So I don't know how much pain you're willing to take on that trade. Don't freak out if it starts moving higher. But 28.25, the monthly open is at 28.24, exactly where you entered. That's sort of the max bearish invalidation. Pete, does that help? Does that make sense, man? Jamie tweeted, oh, what are you saying here? Where was that tweet? Oh, here it is. You're saying he says, so the big giant screw you in the indices would be if this dip is a B wave. So what that means, oh, Roxy's saying, could you please explain? The French in me is confused. No worries, Roxy. So in Elliott wave theory, your corrections or your motive wave or your trend, those typically happen in 5 waves, Roxy. Corrective waves or pullbacks within trend typically happen in 3 waves. So you typically have a 1, 2, 3, 4, 5 count, 5-wave advance, typically a 1, 2, 3 count or a 3-wave decline. It's usually counted ABC. So he's saying the bigger screw you would be if this pullback is just the B wave of a correction. So B, one last correction higher, C, before you start 5 waves low. Do you know what I mean? So everyone would start getting scared. Everyone freaks out. This thing drops, completes a near-term correction, but then that whole thing would be A, B, and the last C correction would be the blow off. Everyone gets all excited. Then completely, that would be the actual high where prices would start to go 5 waves lower. Roxy, does that confuse you? I don't want you to get too held up on it because Elliott wave is something that we use as a reference point. It's not something that we use as a strategy. And it's just a helpful way to be able to ascertain, broader trend and directional bias, the way that market is trading. So, yeah, I hope that offers some color to it. Okay, I understand Elliott wave part. I wasn't sure which B wave he was referencing to. So if he's saying this pullback is a giant B wave, it would be he's basically suggesting that this is like A. I'm not sure which would be A, either here or here. This would be a B, and then we would see one more blow off C before it starts to fail. So it would be a deeper cut for the B wave. So I don't really fancy the indice here, near-term support. Like I said, Pete, look for a little bit of rebound, but that's sort of the big level. The other thing I want to talk to you, I'm not sure it was you, Roxy, that you're asking about NASDAQ. Was that you yesterday? Yeah. Here's the NASDAQ chart. Do you remember that? Oh, we actually got a decent reaction yesterday. So do you remember this chart? We were looking at it, and this is the region of resistance that we identified after we broke below it. So this is a basic 38.2 retracement of decline. Nothing fancy. That's exactly what caught the high. This longer-term 100% extension off the yearly lows was a very well-defined fib because we got the outside day reversal off resistance there back in June. So once we broke above it, obviously the pivot leads you higher. We turned raised ceiling, as it's called. We turned right ahead of the resistance, upper slope. That's very, very weak signal in price. It was accommodated by a divergent signal in the reference momentum oscillator, right? We didn't get a new extreme in the oscillator, but we got a new extreme in price. So the turn is beautiful. The rebound is exactly where you'd expect to find some resistance, and it's exactly where you are finding some resistance. Now, this slope is all derived in red off of these two reference points. We took that slope and attached it to the highs here. We saw 2 touches, again, the raised ceiling. If we take it and attach it down to these lows, you know what I mean? There's still some room to go, in my humble opinion, for the NASDAQ on the downside, but sub 73.21, you're at risk. Okay, that's the top end of that resistance range. So, I still think you possibly get a tag of this parallel before anything happens. If that breaks, the big support zone is 70.50. Now, that's like if things fall apart a little bit more dramatically heading into the start of the month, but those are the levels to watch for. Interestingly enough, again, NASDAQ, DAX, who is looking at this? Nope, that's not it. Jura 30. Look at this thing. Ooh, it broke. Wow, 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 wow. I can't believe I missed this. Okay, so look, this is what I wanted to highlight yesterday. I was going to put it in the report, but I didn't think it was going to be an actionable enough move as far as trying to catch anything. I don't want to encourage people to chase, but 60 hold in momentum. Do you see this? Every rally, 60 hold, so it continues to suggest the short side still has control of the bigger, larger trend. Again, 60 hold, 60 hold. Here's the turn lower, right? Huge confluence resistance. This is your yearly open and the 618 of the yearly range. I mean, you couldn't ask for a better confluence resistance level. We sat there for 4 days trying to break through it, failed. This slope you see right here is the same slope of the pitchfork from last year and this year's high. We've been working with this pitchfork ever since. The parallels caught the lows, After we made that spike high, just started throw it up there. It converged right on that same region. Here we are failing. The move to the downside, a basic 38.2 converged on the 100-day moving average. That was at 1258, 12,586 rather. We're breaking through it. And if we close below this level, the next big level of support doesn't come in until 12,400, 12,395. Okay, that's the 2015 high, just an objective swing high in price. You can see clear pivots here on the upside, acceleration, support, acceleration, both sides. That converges on a basic 618 retracement of the stretch off the lows from last month. Actually, this is from the June lows. So by all means, doesn't look too constructive here for German equities from here. Obviously, this whole thing with there's the whole geopolitical thing. What happens first? Whatever. I'm not even going to get into that. Concerns about rerouting plans to get that pipeline from Russia, or whether the tariffs are going to be more of a prominent full-on trade war instead of the skirmish, as it were, that we have right now. These are all things that we can't control. What we can control is what we see in price. And right now, the turn from resistance was magnificent, in my humble opinion, specifically with the fact that momentum held these 60 region as resistance. Remember, in down slopes or in downtrends, typically resistance will hold in momentum at 60. And here we go. Again, the close below this certainly leaves room, in my opinion, for further moves lower in German equities. Okay. Roxy, does that help on the DAX and NASDAQ? Pete, we got you on the SPX. US 30, I really don't think I have anything on the Dow, to be quite frank. This thing is just ugly. Okay. Yeah, I'm gonna have to do some more work on this for the Dow. Well, it's definitely not correctionary in nature. Okay, watch those levels. Watch those levels. Monthly open resistance comes up here. So 2550, forget about it. Same thing with the SPX, right, Pete? So monthly open resistance, basically where we open the month. That's kind of like your line. If that gives out, we're looking higher again, period, end of conversation. But this should be your first sort of major area of interest. 25.30. That should be like your first area of interest. Okay. Roxy says, yes, thanks very much. Hey, you're more than welcome. All right, guys, that's everything I have here today. Good luck tomorrow on the non-farm payroll print. Again, we're expecting a pretty decent number. Unemployment is expected to drop to 3.9%. Now, keep in mind, we always talk about this, right? The participation rate. So if you see participation rate expansion, but then you see unemployment, for example, uptick, for example, to like 4.1%, that's okay. Don't take that as a bad thing. If the labor force participation contracts, remember, we're at 62.9%. If it contracts and you see unemployment drop to 3.8, for example, or 3.9, that's not a good thing. Okay, labor force contraction is not what we're looking at. Now, that hasn't been the trend. Point in fact, we've actually been seeing labor force participation pick up and the unemployment rate drop, which is actually a very strong affirmation that there is positive growth in labor markets. Just keep that in mind tomorrow. Okay, the expectations for a print of 193. Last month was 213. Barring a major blowout number, it's going to be hard to see. I'm still going to be looking to fade sort of a dollar rally. A really weak number, that's where the risk is to get some sort of play. Not the likely scenario, but just to put it out there. All right, guys, best of luck trading. Have a great day, a great weekend, rather. I will see you again on Monday for the free session on Daily FX, and then right back here on SB Tuesday, Wednesday, and Thursday. Have a great weekend. Best of luck trading tomorrow, guys. Cheers.